Again, welcome back to the Self Builders podcast with me, Sam Taylor.
And me, Mike Pawley.
Boom. So last week we had a really interesting conversation around why people should use brokers. We used the analogy around plastering and how they make it look easy, and you have a go at yourself and you spend 3 days doing one wall that looks like the Himalayas, and you end up getting a plaster in because, you know, they know what they're doing. And it's a very similar concept to brokers. It kind of leads on quite nicely to what lenders might be looking for, or are looking for, and the differences between what they may or may not be able to offer when looking for a self-build.
Yeah.
How do we kick this one off?
So I said to Sam last week, I think I didn't want us to feel like we were pitching for people to necessarily always use brokers, but obviously always use a broker, but close speech marks.
Yeah.
So I thought we needed to do something on the other side of the coin to go, well, look, let's help people out and give them an idea what lenders are looking for in this space so they can prep their own cases ready to go and get their own finance. Because, you know, like we said last week, if you decide not to use a broker, you're going to need... Well, a bit of guidance, mate. Well, a bit of guidance, maybe. So that's what today's all about, really. The answer to the question is how long is a piece of string? Because every lender obviously is very different. They have different appetites to risk and how they underwrite certain cases. But what we'll try and do is just give you an overview of the key fundamentals you'll need on a self-build mortgage application, so you know what you're going to have to get together, and you're not going to have any of those hurdles which happens, you know, when it goes into underwriting, they come back, they ask for certain things which you could have already had lined up, and then it goes into the queue and you're another 3 weeks away, and then they come back with another thing that you could have had lined up. So we'll try and cover those key things off today. Okay.
Yeah, love that. Good value as well, definitely. So I'm coming to you, myself and my partner, we found a plot of land that we're interested in. The plot of land's already got planning permission.
Right.
We've got a set amount that we think it's going to cost us.
Yeah.
And we've built in a 20% contingency.
Yeah.
What do I need to bring to the table so that we can get a full range of offers from lenders? What do I need?
First thing will be your deposit and proof of deposit.
Okay.
So ideally 25% of the costs, plot purchase plus your build costs.
Okay.
And evidence of that. Normally lenders are going to want 3 months bank statements to show where that savings is evidenced.
Okay.
Unless it's just been moved in as a lump sum.
Okay.
They'll want to track that for sort of fraud and money laundering reasons.
Sure. Okay.
So if that has been moved in and it's a gift, which you can find quite a bit, lenders will usually want a gifted letter. This is where it gets more nuanced with each individual lender. But most will ask for a gifted letter. They will usually have a template or set wording you need to have. If it's moved in from another bank account, save yourself that time delay of them coming back and querying it.
Yeah.
Get together 3 months of the other bank account that it's come from if it's yours. If it isn't from yours and it's from somebody else, it'll be the gift.
Okay.
If that makes sense.
Yeah, that makes sense.
So that can be one of the big things really that causes delays.
Do we need to go and see a solicitor if someone's going to write up a letter to say that something's been gifted? Does that need to go via? How official does that need to be, or can me mum write a note? You know,
yeah. So it'll be fine. It'll go to the solicitor as part of the conveyancing process.
Okay.
But a gifted letter, handwritten, usually as long as it has the certain wording lenders want in there, and the key phrase is normally that the person gifting doesn't have, the giftor doesn't have any interest in the property, and the money's not to be repaid, is usually key. Okay. That's that bit.
Okay.
Sorry,
that's what. Yeah.
I was going to dive into a little bit more, into the rabbit hole, but let's just keep it. Let's keep it
high level
where we need to try and help people get stuff done, rather than going into if this, if that.
Yeah. Okay.
We'll be here all day otherwise. So 3 months bank statements.
Yeah.
If there's evidence that has come in of a lump sum from another account of yours, 3 months of that bank statement.
Okay.
If it's from somebody else, gifted letter. If it's a gift.
Perfect. What's next?
Income proofs.
Okay.
So similar to any mortgage, really.
Yeah.
If you're the difference with, when I say similar to other mortgages or similar to standard mortgages, is the underwriting's more in depth, even on the standard things. So like the bank statements nowadays, most lenders if it's a traditional sort of purchase, that they may not even ask for bank statements or just 1 month
Okay.
of your current account where your salary gets paid.
Yeah.
The self-build lenders will want 3 months bank statements. We talked about deposit. Sorry, I'm moving on to bank statements sort of separately here. But 3 months of the deposit where the bank account where your deposit is.
Yeah.
But they'll also want 3 months statements from every single bank account that's live on your credit report.
Sure.
Most self-build lenders, not all of them, but most of them will. So that can be a lot.
Yeah.
That can be a lot of paperwork.
Yeah. So let's say a lot of people have got their personal account, their partner's personal account. You might have a joint bank account for bills. Joint savings account. Yep. You may have some investment accounts or ISAs. You need information around that.
Not savings accounts unless it is forming part of the deposit, and then you need 3 month statements.
Okay, all right. And then I guess any other kind of
investment accounts, normally a summary of the investment and what it's worth that day is usually fine.
Okay.
As long as that statement's dated within 3 months.
And this is because there's so much more risk involved in this, right? So they need to be really comfortable that they've got a full, transparent view of your financial situation.
Yep. And another top tip on bank statements.
Oh, we love a top tip. We haven't brought in enough top tips. Let's try and get a top tip in each podcast.
On the bank statements will be payments. So if there are any unusual or strange transactions.
Okay.
Sam's making a really funny face. He's probably thinking something completely different to what I'm alluding to. But so trying to think just strange payments that aren't. When I say strange payments, actually, no. What I think I should say is and where it gets highlighted more with underwriting is where the payment reference isn't clear. Like some companies don't necessarily even show a part of their name on a reference. It might just be some strange numbers.
Sure.
And if there's sort of, thousands of pounds going in and out of a strange account, underwriters may flag that. So a nice thing as that top tip is to highlight those before you send the statements and put a summary sheet in with your application to say highlighted in
lovehoney.com. It wasn't everything you thought of.
Okay. Or whatever it is. And then just highlighted for the underwriter to explain what it is. But the reason that will be a top tip is time, because how they'll work, particularly if you're a customer and you don't have a relationship with a lender, you're not in any sort of preferential service agreement, that you'll get the case submitted. It might be 2 weeks before it's looked at. Underwriter will look at the case, come back with queries to the client direct. It will go back in a queue post submission, which could be 2 or 3 weeks to answer that query. Whereas if you have the header sheet, you can condense that time period.
Brilliant. Okay.
That's the main thing.
Okay. So we've covered off deposit,
bank statements.
We've covered off bank statements.
Yep. What's
next?
Income proofs, which I sort of touched on and then went backwards.
Okay.
So income proofs,
Income proofs, 3 months.
Yeah, 3 months pay slips, fairly standard.
Self-employed?
Let's stay unemployed for a sec.
Stay employed.
So pretty much all of the self-build lenders will want clients to have a P60 also.
Okay.
Whereas traditional lenders don't tend to usually want a P60, to be honest with you. They will usually all ask for a P60. Okay. If there are bonuses involved and you're employed, if it's annual, last 2 annual bonuses, and the last 2 P60s, they like that so they can marry up the bonus to P60. Mm-hmm. If it's quarterly, last 4 pay slips. Some lenders will only ask for 3, but get 4 ready. As a tip. Biannual will normally be last 3. Okay. So sort of get again 4 of those pay slips.
Does that cut? And I just want to something's just popped into my head. Does that cut any sway with lenders? The fact that you're going above and beyond, the fact that you're looking at, there's some payments here and it doesn't say who they're from. I'll write a letter, or this has been gifted. I'm going to cover that off here. Or instead of 3 pay slips with bonus, I'm going to do 4. Does going the extra mile, does that help at all, or it just speeds up the process?
It's a good question. And this comes, so I have a monthly meeting with most of the self-build lenders just to sort of review cases, because we have service agreements with them and make sure everything's going okay. And I would say yes and no. So they don't want more than they ask for necessarily, because it causes them more work.
Fair.
When there's a lot of paperwork on most of these cases anyway. Yeah. But they also want to make sure that everything that should be there, is there. Yeah, and to answer your question, does it help? If a case is packaged or coming in from a customer and direct to a lender. And this works from the broker's standpoint also. I know this because this is one of the key topics of our conversations, where lenders have pain points working direct with customers, is drip feeding in things and not getting in what's needed. Whereas when they work, they know a Mayflower case, we do it every day. It's all in one. They can underwrite it, it's done.
Okay.
So this is a pain point, and it won't necessarily mean the case isn't underwritten in exactly the same way. There's the standard sort of things that have to be in play, but the underwriter also has discretion on certain things. And if they've dealt with a case that's had documents drip fed in, or not had documents sent that should have been sent, it's going to the bottom of their queue. So getting everything in as it should be correct, even with a nice little that summary header sheet, day one is definitely going to make even a subconscious bias.
I'm with you.
More positive weighed towards getting your case.
It's the same with anything, isn't it? You're not going to, if you're writing a report for your boss at work, you're not going to drip feed them the information. You're going to probably see this is everything. Here's a bit of an executive summary over what I've done, and here's the full piece of work.
Give it completely. Same sort of thing. So I do think it helps for sure if it's all there as it should be in one go, rather than those just being sent as they come in.
Nice. That was like 2 top tips.
When I say sent as they come in, but sent as you find them and ping them all over, do it nicely all together. That is a second top tip. That probably is the toppest of top tips, to be honest, because I know that's a massive pain point for lenders. And I know this because certain lenders, we have this and have had it in the past with certain lenders where they won't want to work direct with clients. There are lenders in the space that don't work direct with clients for that particular reason. It's easier for them to work with a specialist broker who they know everything will be bang on.
Because essentially they're being underwritten as well, and the speed in which they can get through X amount will
their KPIs will be based on their turnaround of case and all that sort of stuff.
Cool. What's next?
So income proof we were talking about, employed. So 3 months pay slips, P60, bonus pay slips, have them ready. And and the top tip, if they ask for it, just make sure it's all there. Don't make an assumption that if they've asked for, this is where it usually falls down. So they've asked for the last 3 months pay slips, send them the last 3 months pay slips. Don't send them the 2 most recent pay slips. This may sound, everyone listening, all 3 of you might be thinking, what are you on about, Mike? Of course we'll send the last 3 pay slips. Doesn't happen. People go, do you know, they're all the same. I can't find my April pay slip. I'll send March. No. That's just going to, that'll be a 4-week delay on your application.
Wow.
Because even though every pay slip is the same.
That's another top tip.
But these are things that we see, which lenders will also see when clients go direct. So just even though your pay slips may all be the same, if they ask for the last 3 months pay slips, give them the last 3 months pay slips. They will come back and request that. And it just causes a delay. It's not to say it will necessarily affect the outcome eventually. It just makes it a lot harder for you as a customer, and it makes it harder for the lender as well, I suppose.
Also as well, when we look back at some of the other podcasts that we've done, we talked about contingencies, we talked about products and materials increasing in price. If you're delaying by not having your house in order, you're almost risking your contingency, because fuel prices could go up, or timber prices could go up, or whatever so it pays to have your house in order.
Talk about a 4-week delay there with one sort of round of inquiries.
He's got the hiccups. Mike's got the hiccups, everyone. So
it will be lender specific, and it will be time of year specific on how busy they are as well. But if you have 6 of those because you drip feed in one, and there's potentially sort of 30 or 40 documents that need to go in, that's where those go. Where we see this, where people go, it's taken me 6 months and I still haven't got my offer from a lender, and that's usually the reason why. So you will get to the outcome, but it just delays. That's employed.
What are the nuances around self-employed?
Self-employed depends how you're employed. So most of our customers that are self-employed will be self-employed as a owner of a limited company. So lenders will class you as self-employed if you own more than 20% shareholding in a limited company.
Sure.
What I would, again, more in-depth underwriting than a traditional sort of mortgage. The lenders, if you own a limited company or you own more than 20% shareholding in a limited company, they'll usually want the last 3 years full accounts for that business.
Right.
They will usually want the last 3 months bank statements for that business.
Okay.
And they will also want your last 3 years personal tax computations and tax year overviews.
Right. Okay.
To top and tail everything. So they can see, basically they'll want to make sure the business is still profitable and going to be running in the next 12 months. So your income's fine.
Yep.
Is why they would want to look at the business accounts. And then they obviously want to see what your income is from your personal tax return.
Yep.
Now, lenders will use different sets of income. So we sort of diving into a little bit of the nuance of underwriting. Certain lenders will look at the net profit of the business, which is lovely if you're not taking everything out of the company, because you can get more income to make up a bigger debt. And other lenders will just look at the income from the tax computation. So again, that's about aligning your circumstance with the correct lender.
Okay.
So what I would say, if anyone is going to want to do it themselves and not speak to anyone and take the time to do it, is if a lender says no based on your income, because they don't necessarily always, not that they're not open with their criteria, but you'll just get a no. And it might just be because they only take the income that's declared on your tax computation, but actually that may only say 50,000, but your business has got a net profit of 250.
Yeah.
There could be another lender that everything else fits together, and they'll take the net profit of that company, and the loan, debt quantum's fine.
Sure. Okay. All right.
But documents wise, so recap on that.
Yep.
Last 3 years full accounts for the business if you own more than 20% shareholding.
Yep.
Last 3 months business accounts for most 50% of self-build lenders.
Okay.
And then they'll want the last 3 years in most cases, tax computations and your tax year overviews. This is another one that we'll see where people won't send tax year overviews when you've requested it. Lenders, I would imagine, would see the same thing. So yeah, just again, make sure all the documents are in.
Okay.
Self-employed sole trader.
Yeah.
A little more straightforward.
Okay.
Lenders will just take the usually last 3 years tax computation. And they want the tax year overviews. How the lenders assess that will be specific to each lender.
Okay.
So some will take most recent year, some will average the last 2 years, some will average the last 3 years, some will take the most recent year, some will do either any of those three, depending on what the figures look like in each one of those years.
Okay.
So again, making sure you're aligned to the right lender and how they treat your income based on what you need.
Okay.
Just aligning it to best suit you.
Anything else in there?
What for income for self-employed?
Yep.
No, but what would be well, I say no, it's a yes, really. This is going back to that good to have, may not need, is an accountant's reference.
Do you know what I was going to say? Whether this would, depending on the sophistication of the self-employment, and if you've got someone doing your books for you, an accountant and that, then a lot of this will already be with the accountant, where you can be like, I'm going into a self-build mortgage. This is what I need for the last 3 years, 3 months, whatever the case may be.
They'll give them all the documentation, but some lenders will always ask for an accountant's reference as well. Okay. And they may have a template. Okay. Some lenders don't. They'll just want a headed letter from the accountant explaining about what basically the summary section that you'd find on a sort of accounts, but a little bit more detailed. Mm-hmm. That would be a top tip to get, particularly if your company structure isn't that straightforward. Company structure in the sense, if it's anything but limited company, I own, I am the significant person of control. I own most, over 20% or most of the shares. If it's sort of group set up or there's multiple companies, definitely have an accountant. Definitely get an accountant's reference, for sure. To it, just explain to the underwriter that even though you can put that in your own notes, they will still request an accountant's reference. For example, and we see this quite a lot, particularly where there's like property companies and operating companies, which are, not with different people. There might be 2 or 3 different companies that they own that are all sort of related in one way or another. We need to get an accountant's reference.
Okay. All right. So that covers off employment and self-employment.
Self-employed documentation, to get yourself ready.
What's next?
This is going to be a long podcast. Right, let's whip through this because there's other things we need to get into. So ID documentation, ideally passports, driving licenses, proof of address.
Okay.
You will also need costings, a full breakdown of your bill cost.
And where do we get those from?
You want to get them. It depends how you're managing the build. If you've got a main contractor, really straightforward, they should do it. They'll give you an itemized quote.
Okay.
Lenders will be happy with that. If you're like most of our customers and they're sort of just managing the project themselves as the main contractor, you'll want to get itemized quotes from each one of those different subcontractors. If you're buying materials yourself and just subcontracting the labor, you're going to want to have to get a quote for the materials and break that down for the lender. Now, we've got some templates on the website you can download for free. Like, you can have them, and every lender will be happy with that template.
Okay.
It's fairly straightforward, but it's the information that you need to get into that template that will be, the legwork if you are buying all the materials and subcontracting labor out for each individual thing.
Okay.
But lenders will be happy with those templates we've got on the website.
Okay.
That can be the bit that takes the time, or pay someone to do it for you. Like, there's loads of people out there, loads of different costing services that you can use to get those costings done, but you will need it for the lender, for sure, with your contingency built in.
Yep.
And what they will also want to see, moving away from documentation, is that the cash flow requirements of the project work based on how their product releases funds.
Sure. Okay, let's dig into that a little bit then. So there'll be a drawdown based upon the
value of the property. So it will be, the cash flow requirements will largely be dictated by obviously how much cash the customer has to put in towards the project.
Yep.
If they do own the land or don't own the land, and what superstructure they're likely to use.
Okay.
The reason being, obviously, the more cash that you have to put into the project, you don't necessarily have to leverage as much on day one from the lender, and you can leave maybe some money floating around to enable the cash flow for the next stage before the release. If you own the land, normally, like most, you don't need necessarily any cash if everything else fits together. We'll caveat with that, because day one we can release value based on the land, so you don't necessarily need any extra cash on there. Hence why that's important towards the cash flow, because most lenders will give you sort of worst case 60% of land value day one, suck it out and get moving forward. And the third point I said on the cash flow was superstructure. So that will be important, because if you are using a more modern method of construction that's off-site, whether it be some variant of timber frame or an ICF construction even, that system will need to be bought and paid for before it's delivered to site.
Right.
So it gets a little more peaky on cash flow compared to, let's say, A.N. Jones construction company that knows they have to, do 2 weeks worth of work, invoice, and then you can pay them after they've done the work, basically.
Okay.
And it's slightly more steady.
Okay.
So you will need to make sure that the way the product you've picked when you go and direct to a lender will marry to the requirement you need for the cash flow.
Okay.
Because what you don't want to do is get through underwriting, and it will usually be when it gets their surveyor.
Yeah.
They'll highlight it.
Okay.
Because the underwriters aren't necessarily experts in construction.
Yeah.
Like most of the lenders underwriters who do underwrite self-build cases, they're specialists, but they rely heavily on their surveyors.
Right.
So the comments from the surveyor could be along the lines of, well, this is going to potentially leave a customer tight because of X, Y, or Z.
Okay.
And that is like 12, 13 weeks down the line.
Right.
Potentially, and you spent money. So
yeah.
A line in that is going to be key, really.
Let's not wrap it up, but let's summarize where we're at in terms of the key things that I need to bring to the table for my lender. Let's start from the beginning.
Okay.
We'll
wrap this up.
Was this bit not?
No, we'll wrap it up. Yeah, okay. No, we'll wrap it up. So we've got the important things they're going to want to
get your pen and paper, guys. Get your pen and paper. We need
costings.
Costings
Needs to be done.
Yep.
With a contingency. So those are 2 of the 5.
Yep.
I think I chucked those. So costings and contingency.
Yep.
Laid out for the lender. Cash flow.
Yep.
You need to be comfortable that the way their product releases funds is going to work for you in reality.
Yep.
4, the documentation and affordability obviously needs to work, and the way they treat your income essentially needs to fit their affordability model. If it doesn't, some other lender will probably treat it differently. Just bear that in mind if you're going direct to lenders. This is where sort of it can take a lot of time.
For sure.
And you can tie this in with the last one, like the construction type.
Okay.
They're going to have to be comfortable with how you guys are building. So what superstructure you're using. Not every lender will be comfortable with every different type of superstructure. Yeah. And the further sort of nuance to that is, depending on the outer skin, they may or may not lend.
Right. Okay.
And then we'll jump into 6 is how involved you're going to be with the project. So not every lender is going to take the same standpoint on that either. Like how involved you're likely to be, their appetite to that risk is going to be different. Yeah. So you need to make sure you're aligned with that. So the 6 things really.
Okay, excellent. And the reason I wanted to do that, because it's so much. There's a lot there. There's a lot there, isn't there? And like, think about someone who's not overly used to this and is maybe on not a tight timeline, but is like, I need this done within a year because I'm about to live in a caravan with my wife and my kids while we're on site, project managing this, if you will. Having any delays in this is going to be an absolute nightmare. So having all of this information in 6 little categories is perfect.
Yeah,
definitely
the 6 key things.
This is a useful podcast.
We could dive into a day's worth of content on
just on
like what you need for each one of those, but I think that's a lot.
That's a lot, isn't it? That's a lot. Well, look, I mean, look, there's going to be comments underneath each of these. If you're listening to this and this is really valuable and you'd like a podcast based around one specific thing, an example on that might be
could be income for limited company owners.
Income for limited company
owners.
Yeah.
Anything
like that you'd like 20 minutes with Mike, then let us know.
And guests as well.
Oh yeah, and
because we've got guests coming on the podcast, and it'd be nice if we could get guests that people have already asked for.
Yeah, we could do almost like, you know what? One of my favourite podcasts is The Rest is Football. Great podcast if you haven't listened to it already. They do a newsletter once a week, and on that newsletter you can submit questions for the following podcast. It's a good one. We could do almost like a monthly Q&A podcast. That'd be a good one. Anyway, hopefully lots of value. Mike, thanks so much for your time today. That was a lot. You could tell I was starting to glaze. There was so much information on that one. But hopefully you've written it down, and that gives you a bit of an overview of the documentation that you need to pull together in order to get financed on your project. Happy days. Good stuff. We'll see you on the next one.